It's a nice 20 degrees Celsius morning over here from Helsinki, Finland. Wishing you the best of the best and the happiest of the happiest on this start to your Sunday morning, which is way too fucking hot for myself. Elsa's sleeping in the background, so no kitchen time today. Go fuck your spoons and and I'm just trying to have a good time when looking at the same goddamn asset that hasn't moved in like 3 weeks. Maybe even 3 months. Anyways, let's check out what we got in the Krown chain application over here, which can be found at app.krowntrader.net. And we see pretty much the exact same things that we've been seeing for a while. However, there is something of a particular note here, which is the Bitcoin dominance has come down to the 62% marker, which is a little bit outside of the range that we've been experiencing for the past few weeks here. Mostly between about 62.5% and 63.5%. So perhaps it might be worth checking out some altcoins versus Bitcoin, as that's really where all the fun has been had in the cryptocurrency space as of recent times. It's certainly not been with Bitcoin. And with regards to what we see as far as anything else goes, pretty much the same, pretty much the exact same. Jesus Christ, man. Even the open interest still hanging around the just over 2.1 billion marker. And the crypto fear and greed index looks like it's pretty much the same, low 40 read that we've been seeing for the past month or two as well. So realistically, there's not too much made off of that. And right now is the time to be paying attention to price action, because levels are and price action is the most important thing at the end of the day to be marked off of, because that's what's governing your P&L. If that is, if that's your goal, of course, then I'd imagine that is probably the most important thing. So let's get into the actual price action now. Price action charts right here. Starting off with the daily, of which I think we'll actually do something a little bit different today. Starting off with the good old Trollinger bands on the daily. So a couple interesting things right here, as we actually have, if you call this a rejection, we have rejected from the median Trollinger band yesterday, Saturday, a day which I typically don't even try my hardest not to look at charts, although because I am a fucking completely chart TA nerd, I can't help myself. I still look at it even on Saturday, even though I tell myself I'm not going to trade anyways. And what do you know? We did test up to the 20 simple, kind of around the same area that we spoke about yesterday. I believe I said 92.50 yesterday for a short-term time frame range test the upside, and so far being held below there would would favor the downside here from this perspective, if you're being very vocal about that. Now, what's a little bit more interesting to myself is the width of the Trollinger bands right here, which are incredibly tight. And if we go over to the BB dubs, which we've been watching for the past for a while now, realistically for the last couple months, really, we are starting to get down into an actual level that we actually have never seen. Maybe we are at a point now where there's only been one time in history on the daily where this has been, maybe two times, you could say, one or two times on the daily where we've been this tight on the daily Trollinger bounds, which I think is of particular interest, just because you can see that when we do get down to these regions, it's usually a stark contrast of what happens over the next few days. For example, the last time that we were this low was actually in early November 2018. That was before this. The time before that we were this low was back on over in October 2016, right here, which was, let's actually go right here. We have some more price action history there as well. Well, it was in October 2016, so somewhere around here. So leading up for this major explosion from $700 to 1,400 over the next month or two. So quite literally a 2x, and then tack on another 100% on top of that a few times more over the next couple of years. Looking a little bit further back, if we can, what else do we have that's comparable to what we're doing right now? I think this area right here, April 2016, is the only other one. Yeah, it is the only other one. That's interesting. And that's actually this explosion right here. So another 2x pretty much instantly, actually. This is literally this major splurt from about 450 to 800-ish region. So yeah, almost a 2x right off the go into a trending play over the next couple of years anyways. So it does not imply direction, but it does give a bias with the way that we're positioned around the 20 simple, which is just the median band right here, which is not just providing a rejection. And I use rejection very loosely here, but rejection, we'll call it, at the 20 simple, but it's also starting to get it's certainly flattened out, and I'd even say almost a negative slope as it is right now. Of course, at the end of the day, the levels that matter to myself are still the same that we've been looking at for literally 3 months now. 8,900 or 9,000 daily total closure to the downside, and I would consider that resolution of this whole formation. We could talk about targets after that, or a move back above 9,900 would likely do it for myself as well for resolution to the upside and talk about moves towards 11,000 perhaps beyond. But looking at this right here from the MACDs, we do see that MACD is once again turning down after failing to get back above the zero read right here, which is usually suggestive that we will see another momentous drive to the downside in that same direction. And what I'd be looking for is really a break of the high term time frame range plus this to open up and gain momentum away from each other, to the downside to really constitute the next big break. And to put this back into chart formation that we've been following for the last few months here, we can put on our drawing tools right here, and it's more or less this is what I have in the most in what's become a very basic chart. Nice support, nice horizontal support coming in right around a few ticks under 9,000, also synonymous with the 236 fib right here, and also in line with the Cyan 89 exponential moving average on the daily. And if Bitcoin does close a 12-hour or daily below there, which we could make a $50 range between 89.50 and 9,000, then there technically would be a measured move pointed all the way down towards high 7,000s, low 8,000s right here along the 382 fib. Probably bounces along the way where the 200 simple and 200 exponential moving average are around the last prior low coming in from early May at 85.50 to 8600-ish region. I think this is a lot more obvious to call out on the CME chart, but if we go down over here, we do see that CMEs have put in what appears to be a descending triangle with a baseline at that same level, or what would be akin to about 9,000 on spot price action at this current level right here. So it's a lot more visually apparent on CMEs rather than spot, and I do believe that CME formations work out a little bit better. And realistically, the bulls really did have something going on right here. When it was more angled like this, and up until about mid to late June, it was still an ascending triangle was kind of the more appropriate call on this. But now with the advent of the last month and a half, I believe that we're seeing something new being constructed right here. But again, the resolution points to this are actually one and the same both ways, and this is why I don't care about, or at least it's not that I don't care, but I would caution against being the fucking TA nerd like myself saying excuse me, actually, because of this and that and X, Y, and Z, it's actually a descending triangle, not a symmetrical triangle, blah, blah, blah. At the end of the day, I've seen every fucking pattern break out every goddamn which way that it's technically not supposed to. Statistically not supposed to. It's all about statistics. And at the end of the day, if Bitcoin does break the top side resistance of this, which, most aggressively would be 9330-ish region on CMEs, and probably just 9300 straight up. No, 9250 on spot. Let's go back. Let's go back here actually. Then I would be looking for extension all the way up to very likely 9,700, and probably at that point a short-term pullback with a setup to strike back into this blue box territory at about 9,900 to 10,000 bucks again. But until that happens, my main disposition on this is actually bearishly biased. But again, even for a bearish bias, does that mean that I just blindly short right here? No, I'm not interested in doing that. I'm interested in playing the breakout here, or if I can get a position in on the next test of this topside resistance, assuming that we get another drive towards 93 or 93.50, and that would offer up a very easy way to be managing risk off of, just because we would expect that if this is going to play bearishly, then we would not get any sort of closures above, especially 93.50. So a nice, easy way to be managing risk right there, if that is going to be my disposition. So one of two things, I'd be happy to trade here, but as it is right now, it's so fucking mature from all major angles, whether you're looking at the volume signature, which is incredibly contracted here. Let me just go back to this time frame right here, which you can see quite easily if we throw a trend line on it. If you love it, should have thrown a trend line on it. Is that a thing? I don't know. Oh, well, whatever. You can see that we're pretty much even at the apex, which you very rarely even see things get this full, which calls into question that this is what we're doing to begin with. So I do think that it's actually very appropriate to say that. But if we are going to redraw this in a new way, what would be the new way to redraw this? Well, it could be that we have something completely new going on. That is certainly a possibility. If that is what is happening, we'd expect this to actually continue going sideways here above 9,000 for the next for the next week. for the next week again. Um, and then we probably have something new going on. But if this is going to be redrawn, there's actually another way to redraw this, and it would be looking at this as a descending triangle right here, which is a lot more obvious on CME's chart. And then we could redraw this a little bit more, which would elongate the apex about another couple weeks out, actually, to early August, which would suggest that we're actually just getting about 75% full within this formation, which is when it's statistically likely to break. Now, it being a descending triangle would put the odds, or would put the statistics on the favor of the downside. We'll obviously look at probabilities later, but this is also coming along the side of historical volatility percentile, which is also massively contracted here as well, getting into areas that are just incredibly fraught with peril, suggesting that we are going to see a pretty massive move. To put this in perspective here, and I'll actually play around with the settings once again. A lot of people have been asking me about my settings. I changed these around. Do you want to use? I was playing around with a 100 annual vol right there for a while, but I've actually switched to 365. The reason why I did that is because this consolidation has taken so fucking long that 100 days will only get like the last 3 months of action, whereas 365 is getting a year. And right now you can see that over the past year, it hasn't been all that bad as compared to like the last 3 months, which has been a very tight range. Anyways, my point is that anytime that we do get this low with a higher with a higher look back period, it's naturally going to have bigger implications. And realistically, when was the last time that we saw this aggressive of a read? October 2018, actually, which was precipitating this 50% move to the downside. Doesn't mean it's always going to move to the downside, but it does mean that we are looking at a pretty fucking massive move. And if we go back a little bit further in history, I'm sure that we can find maybe another example or two where this got very aggressive. Yeah, April 2016, that was actually very similar to what we saw in the Bollinger Bands, if you recall back to that. And before that, we have not many, actually. That's pretty much it. Yeah, all the other ones, not so much. So fair enough. You using a higher look back period with this is, I'd actually rather not be doing that in this area, but because we are at extremes and because the other one is just it's just going to continue to go lower and lower, I'd rather raise it up and see if there's anything comparable from this perspective. And there is one, maybe two times in the history of Bitcoin where it's been this low for this long, and those typically do precipitate massive 50% meltdowns or more, or humongous X's to the upside. And I say X's meaning like multiples rather than percentages. So we are that is still very much in the cards. Should also recall back to CMEs right here, which do have a daily jewel sell signal, a continuation sell signal. This is a haughtier sells from this sell signal right here, which happened on 9th of June all the way around 9600-ish region. Still in play, and I would expect this to play out if we get another turn down on the light blue here. So if you do have access to the jewel, watch for that to happen, and you'll naturally know that that's likely to happen if basically we see this area broken right here, which would be the bottom support of that descending triangle if you are looking at it as such. So all these things kind of line up with each other, which I really do like. Confluence is typically a good thing and a trader's friend, but still need to see the last nail in the coffin if this is going to break in that way. By the same token, as I said, if Bitcoin does pop back up here and take out this trend line, obviously, but realistically take out this last prior lower high right here at 94.50 on spot, then I would be looking for an overall move to the top side of the range. Does it probably go to 97 first and test this lower this high right here and probably play out a little bit of a short term down there, and then reaccumulate on the short term time frame and make another stab up towards the $9,900 to $10,000 range? Probably yes, but I think it would just be appropriate to overall be looking for a move towards the top side of the range and play out the potential hidden bullish divergence that is very loosely present on the 3-day RSI. We do still have it kind of in play. 1, 2, 3 stabs right there. It's really starting to lose its focus, though. I would say 1 or 2 more 3-day dildos that fail to get that move to the upside above, especially 94.50, and that will no longer be in play. It'll no longer be in play, even if you squint your eyes and make an excuse for it. So time is of the essence here, and I do think that a decision will be forced very soon. But I've been saying that for a while now. So whenever I'm talking about something like that, it's going off statistics and probabilities, which sometimes we get outliers, and that's a part of the game. It can happen. So fair enough. Looking at the 3-day right here, while we're here, let's go check out the reverse Stochastic indicator cross, which is showing that momentum will actually pop back up to the upside with any sort of a closure above 91.80. 91.80 is also directly in line with the 21 exponential moving average, which I do like for confluence as well. So as long as we're below that, the natural path of least resistance will be to the downside, obviously. So, again, it offers up a very easy way to kind of be looking at this and managing risk. And we are going to be closing a 3-day dildo tonight at 8 p.m. Eastern time. So we will actually get resolution on this. And any sort of a closure below the 21 exponential moving average here, which will not only keep the momentum to the downside, will also naturally start to cross the 10 simple below the 21, which, looking at the history of that for this time frame, it's not great, but it wouldn't necessarily be a good thing either, but it's not a great time. I'm kind of making a mountain out of a molehill. You can see that we've been talking about the same fucking thing for the last 3 months. So sometimes you just want to talk something about, and realistically, it's some Jesus toast. So I'll call myself out on that one. Looking at the 2-day as well, same sort of thing. And I do believe that we are not closing it tonight, actually. But the 2-day 200 simple is actually doing a very good job of getting our lows thus far as well. And guess where that's coming in? Around 8,900-ish region. So anywhere between 8,900 to 9,000 is kind of, where the buck stops for myself. Any sort of a 2-day total closure below the 200 simple, and I do believe that would be rather problematic for price action, and very likely spurring off a move all the way down to the 200 exponential moving average, which would be that low $8,000 number. So again, I like the confluence there as well. And guess what? Momentum remains to the downside as long as we're closing below where 91.80. So that's sort of like the next pivot on this from the higher term time frame perspective as far as momentum goes, with the critical area still being more or less the same. Now let's measure that up with how the lower term time frames are going right here, of which Bitcoin looks like it's in the process of putting in yet again another lower high on the 4-hour. And if you're just following the trend here, I mean, the trend is your friend, and the trend is making it easy for you, except it just doesn't move all that much, but it is following the trend. It is to the downside here, obviously, on the 4-hour. Now other time frames will vary, but looking at the 4-hour right here, I think that is interesting that we have a couple of bearish things going on right here as well. 4-hour hidden bearish divergence potentially in play between this point and this point, which it would be this high right here at about 9,200. So as long as below there, which we actually did get a couple sells off from that region, well, it would suggest that that is in play. And then more importantly, we're going to see 4-hour Stokes likely cross the downside as well, if I had to guess, with a closure maybe here or lower. If I had to guess, so let's see what the indicator says. Oh, what do you fucking know? 91.66. Where are we right now? 91.57 on the next 4-hour closure in 24 minutes and 38 seconds. So keep that one in mind as well. Man, my voice is really leaving me right now. But essentially, if we close into the 4-hour dildo below here, I'd be looking for that hidden bearish divergence to play out, and that likely gives us another move back down to like 9,100 or 90.50. Wow, $100 move, Krown, great one. I know. It sounds ridiculous right now. It's just there's no other game in town on the weekend because most things don't trade on the weekend, for traditional markets or forex. So we're stuck with good old Bitcoin, the orange coin over here, providing all sorts of entertainment. It's like, Jesus Christ, man, how addicted am I to trading when I'm looking at this over the last few months? Like, you would think that I would learn my lesson. No, I would not. But then again, you're listening as well. So you're in this boat too, my friends. And we're at minute 17, so actually might have offended some people with that, because the crypto nerds, not the crypto nerds, but the crypto nerds, I have a theory that the crypto nerds click off first after like minute number 5 to 10. They just want like the first initial spoon feed. Then the TA nerds stick with it, and that's who I'm speaking to right now, most likely. Let's see. What about the 3 hours it already turning? We'd expect it to already be turning. Yes, indeed it is. What do you know? And it will remain to the downside as long as we're below where? Below 91.90. What's interesting about that? That's actually our proverbial lower high right here, if you're following the trend from the 3-hour perspective. And what do you know? We have the same fucking hidden bearish divergence here between this point and this point, correlated with that $9,270 high right here, and this high right here, of which very likely gives us a move back down a little bit below 9,100. Potential, as always, to actually break through the floor if that condition does get met. But here's the thing: remember, CMEs did close the week at 91.95, and that probably means that by the time that CMEs open, we probably hang around this area overall, 91.50. So a tight range now on the short terms between 90.50 and 92.50. We'll call it $200 range. Very, 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 very naughty. And I do not want to be. I don't really care to be trading it, even if it's not a weekend at that point. Looking at 2-hour Stokes right here, kind of nosediving a little bit, again, putting in that lower high, putting in the same sort of hidden bearish divergence, going all the way back now to this high right here at about actually same area to be fair. But again, probably good enough to get price action back down a little bit below 9,100 at the very least. What about the hourly? Same fucking thing, same fucking chart. Momentum will actually pop back up to the upside with a closure above 91.50, so there is a counterpoint to that. And so let's start to like wrap up what we're looking at here. I don't think that I need to make this video very long. The last few videos have been very long, but because there's no traditional markets to cover today, I don't really have too much to add that hasn't already been said from yesterday and maybe even Friday. But basically, as long as Bitcoin is below the 4-hour 200 simple, there's no talks of reversal even on the short-term timeframes. That also means that we could play out a range all the way up to 92.50, and it being a weekend where you typically do get some nice good liquidity hunts to both sides of the short-term range, that being about 90.50 to the downside and 92.50 to the upside. I don't think that that's out of the cards. I just think that if it did make it around there, probably does get rejected until we get CMEs open back up for trading later today. And by the same token, if we move back down to the downside of the range 90.50, I don't think that we're going to break it just yet as well. Maybe if CMEs are open and that sort of thing happens, or if it's tomorrow and New York Stock Exchange trading again, then yes, I think it's potential. But for right now, to me, it just looks like more sideways within a $200 range, and we're like literally right smack dab in the middle of it at 91.50. $200 range, we're at the median, quite literally. What else do we want to be looking at here? Let's go take a look at the medium-term timeframes, like the 10-hour and 12-hour. 10 hours popping up as well as far as momentum goes, but let's see what would need to be turning it back around. Yeah, it needs to close below 91.20 actually, which doesn't really give me too much from this chart actually. 12-hour, what are we showing here? Momentum will remain to the upside as long as we're above 9,100. So fair enough. Keep your eyes on that, because if Bitcoin does close below 9,100 on the next 12-hour, very likely we will come down all the way to 89.50 and test around there. Again, I don't necessarily think that Bitcoin has the momentum to break it. As long as it's closing above 9,000, I do not consider the high-term time frame range broken, and even 90.50, is still of interest as well. So it's just usually you just don't see it on the weekends. That's the thing. You'll see moves on the weekends, just not sustained reversals on the weekends that are contrary to the week's directions. I would strongly challenge, if you disagree with that statement, I would strongly challenge you to find one example since CME's debuted in 2017, late 2017 that is. Do you have to be very specific with that, where you see a reversal that happens on the weekend that was contrary to the week's direction on at the very least a daily or higher, and that gets follow through on the following week. There is not one to my knowledge, and I've tested this multiple times, and I feel like I get misheard on that statement a lot, which is why you hear me harping on it quite a lot as well. Anyways, let's take that off. Daily Stokes still headed down. Obviously, I'm curious what would be needed to turn them back around. We need to close above 9,300 essentially. So now we can kind of really come in and make a little bit of a full circle here thing here. As long as 12-hour and daily is closing, especially below 94.50, obviously, but even 9,300 now, we can say that momentum and trend will very likely favor the downside. Until we actually get the break, am I interested in trading it? No. Is this financial advice? Am I a financial advisor? No, I'm not. So you shouldn't be listening to that at all anyways. But it's given us a nice and easy kind of glide down here. And the way that the 10 simple and 21 exponential average are kind of snaking around quite a bit here suggests that the next sort of major divergence that we get away from these two is likely going to be the resolution. So right now, technically it's a little bit downside angled as well. Yes, but that will naturally stay that will naturally diverge more and more, suggesting that the trend is strengthening to the downside the longer that we are below even 9,200, which is obviously even below the daily momentum. Very interesting stuff. If we're really, for really a masochist for fucking sandpaper masturbation. Do I want to say anything more about this? I think it's always good to point out that on the weekly, we still do have hidden bearish divergence present on the weekly. The question is, has it already played out? Because this is, this is a move right here. It's 15% down. It's definitely relevant. I don't know. I think you could make the argument for it. I could make an argument for and against it. At the end of the day, levels, man, levels over everything else. Let's go check out some of the shit coins here. And let's see Bitcoin dominance first. Hey, Bitcoin DD, I need that vitamin D in my face. I have nothing to make off of this. I would be completely stumped by this chart. I have no opinion on this. I have no opinion on. I mean, you can see this both ways, right? You can see this as a descending broadening wedge. You can see this as a downtrend on the weekly too. Fair enough. Which one do you go? I think you have to go into individual altcoins. I think that we're seeing bifurcation in the market actually. Butyrol, I'd still be bullish on, looking for a move towards 0.0277, whatever that number is. Litecoin Bitcoin looks terrible, so I wouldn't be bullish on that one. Maybe short term back up towards 47. What else do we have? What about Monero versus dollar? Monero, what do you got? In an uptrend on the daily, so fair enough. Monero actually looks good for another run back up to 70.5. Short term, Ripple looks like it's in a downtrend, although I wouldn't say it would take too much to get another stab up to 21 cents. See what the weekly is looking like. Weekly is very interesting here. We have a death cross going on, and we have potential lower high being put in place, but it won't be confirmed until next week. So it's very similar to the stock market right now. In the sense that, we have a lot of potential major tops being put in place, but they won't be confirmed until we get the real trading week going next week. So it's potential as long as we close here. Looking at Ripple versus Bitcoin pairing, terrible, just atrocious, absolutely atrocious. There's actually no, is there a hidden bearish evidence here? No, there's not. What about EOS? Wow, still looks like absolute garbage. I mean, these are dead heartbeats of charts. This one's even creating a descending triangle over a long period of time here now. But that's accumulation, Krown. I saw that one on crypto Twitter. Well, I hear they also give refunds too. So you're set, man. No problem. No problem. No risk. No risk because no skin in the game. And I got no skin in the game on these altcoins either. So fair enough. We are one and the same. Neo. Yeah, that looks like a great chart. Tron. Tron actually looks okay, maybe on the daily. Losing a little bit of momentum here. I wouldn't mind another stab up to 1.8 cent, but well, actually, it doesn't look so bad here. Golden Cross kind of carrying it up. Hard to hit an uptrend on the daily. Fair enough. Zcash looks like it wants to come down a little bit, 55.5. BNB Cash looks like it wants to go up a bit. Probably test a prior high. 19.25 maybe, and if it takes out 19.25, I would be looking for another $1.50 move, or sorry, more than $1.50 move up to 21.5 before the next pullback perhaps. Cardano versus Bitcoin, what do we got? Still looks to me like it's probably put in a high here, but I really want to see the weekly close. I could still remain bullish on this one on the weekly. I need to see the closure first. I think yesterday I said I would be looking for a move back down towards 1250. I probably would still be looking for that. Yes, I'd probably be still looking for that on the daily. What about Link? Link, same thing. I think that we got it. No, we didn't. I don't think that I got my target on Link. I think I was saying like 7,900 or 79,000 satoshis. Let's see. 4 hours looking a little bit heavy, but does it get another pop back up towards 92,000 satoshis first? Yeah, I think so. I do think so. Short term up. Let's go look at Link versus Link versus US dollar. Oh my God. Hey, my morning's going terribly, as you can see. I don't know what's going on there, man. I can't type anything or speak. Link USD looks actually very similar, in fact. Very similar. Pretty much identical charts, in fact. I'd want to see the weekly close on this one as well. If it closes here or lower, do I think that we're putting it at a top? Probably yes, but it can take some time. If it pops back up and closes the weekly above like $8.50, then I'd probably be looking for continuation coming in next week. But I really want to see the weekly close first. I do think that this one is very likely starting to come into a sideways and downwards consolidation, probably back down to like $7.50 to $7 region. I think low $7 right here is what I'd be looking towards. Major bearish evidence on 12-hour RSI, 12-hour Joule, giving a sell signal as well. Might pop back up to 840 first, but I think that the party's over here for a little bit of time. That's not to say that long term it's bad. Actually, long term it's still the best chart, but it can afford a nice healthy consolidation lower. I just want to see where the weekly closes first, and then I'll be a lot more confident to make a judgment on it. But for right now, it's in play, and it looks like it does want to happen. But first things first, it actually looks like it wants to pop back up to like 8.5, then probably play out some sideways and down coming into next week. But remains to be seen, of course. Do we have anything else to look at? I think that pretty much gets everything that I wanted to speak about. I mean, there's really not too much new things to be looking at here. It's all about the same levels that we've been speaking about. The momentum plays, I suppose, are hopefully in some way helpful to anyone listening out there. We can go look at the probabilities now as well with the areas in mind. Again, I'll even use like the most aggressive short-term area between 92.50 and 90.50. And we can see what the resolutions look like on that. I don't think that that's going to be very helpful, to be honest, but hey, fair enough. We'll do something like this, and we'll look at like a 4-hour closure as well instead. Looking at the 4-hour right here, it would, momentum's turning back down, by the way. Balling Pig's mom said so it's true. Let's see, can we get where's my pains? There we go. My pains, above target probability, 13.25 versus downside probability of a little over 10%. So upside's slightly favored on this next 4-hour closure, coming in 11 minutes and 19 seconds. So very unlikely to happen realistically. Maybe let's go to a 12-hour and see what this one would print. 39.5% probability to the upside. That's above 92.50 versus 33.5% probability to the downside. That's 90.50. I mean, these things have been high for a while now, and we're just not even seeing movement based upon it. It's kind of crazy. Kind of fucking crazy, man. I mean, again, probabilities, doesn't mean that it's guaranteed. Just means that it's more likely, I suppose. But let's use the medium time frame range for the upside, which is 94.50, and the long-term range for the downside, which I'll put at 9,000, although technically you could probably make it 89.50. And let's see what these print. Okay, this is very interesting. You can now see that the downside probability resolution for the high-term time frame range is significantly outpacing the above target probability for even the medium-term range, 27.25% versus 17.5%, and that's on a 12-hour. Let's go to a daily. Daily shows 23.75% to the upside. Versus 33.5% to the downside. Now, again, I need to remind myself that the upside resolution of this, which is even less of a probability than the downside at this point, and has been for the last few days, only correlates to a medium-term time frame move, likely back up at the very least to 97, probably 99 to 10,000. The downside, however, does correlate or does essentially imply a move down to at the very least 8,500 and very likely upper 7,000, low 8,000. So the meaning of the downside target probability is a lot more as far as price action goes on the greater scale. And of course, I do also want to say that if Bitcoin were to head down to those levels, keep in mind, that's actually your monthly support. That's actually your monthly 21 at the upper $7,000 region at 7,900. And if you go to the bi-monthly as well, which I think is actually very, 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 very clear here, that would also be a major opportunity around the 10 simple and even the 21 here as well, which is lower 7,000. So, if Bitcoin did break to the downside, it's actually, I wouldn't actually get macro bearish on that. I would look at that as an opportunity. The long term here, the macro is actually still very much bullish as far as that goes, but the ranges are huge because we got big numbers. We're dealing with 5-digit numbers almost, and that means that we can have a $2,000 washout to the downside and still maintain the long-term uptrend. So perspective is everything here. While I am talking about some bearish things in the short, medium, and what I've even considered long-term here, the macro, the very long-term is still in a good posturing. It's just perspective at the end of the day, because I think a lot of people will hear something like that and just blindly buy in. And then what happens? Well, you're stuck maybe in a liquidation, maybe waiting on your ass, maybe opportunity cost is the thing for you as well that you should consider, and makes it less attractive of a proposition as a trader, of course. Anyways, to wrap up this bitch and send her off, it looks to me like Bitcoin's probably putting another lower high here on the lower term time frames, probably getting ready for another swipe of the very short term time frame range to the downside, somewhere a little bit below 9,100 between there and 90.50. These are things that are just not even tradable for myself. That's not helpful for where we are right now. By the same token, if Bitcoin did flip back around and take out the high of this current short term time frame run at 92.10 on this is GDAX or Coinbase, whatever the fuck they call it now. I look for another test of this trend line right here. That still is our lower high trend line, to be fair, but if that does get taken out, then I would actually look for a retest of 94.50, and that's going to start to look like this thing wants to actually take out its last daily high, and then we got something new going on and something new to discuss, and that would initiate that next move up to, at the very least, 97, probably a short-term pullback from there, and then extension to 99 and 10,000 is realistically what I'd be looking for, and then we could probably talk about 11,000 and beyond. If that condition is met. By the same token of the downside, and what's looking a little bit more likely right now, is the resolution of the descending triangle to, below 89.50 or 9,000, which would initiate moves down to the low 8,000s, upper 7,000s, with bounces or a bounce area at around mid 8,000s, 85.50 to 8,600ish region. And that's going to be a good place for me to leave this one off. My voice is absolutely wrecked. I'd like to wish you well once again. Take care, and until next time.